Few investors over the past couple of years have celebrated Bitcoin's rise like Anthony Pompliano, better known as Pomp. From frequent appearances on this very network to a popular podcast, he's been spreading the gospel far and wide. He is with us now, as you can see, for his first TV interview since the FTX story broke. Welcome. It's good to have you in overtime, Anthony.
Absolutely. Thanks so much for having me.
Yeah. What is your reaction to what happened with FTX?
Yeah, listen, I think there's one major theme. Everyone is shocked. And they're shocked because most of the narrative over the last couple of years has been major players are shunning regulation. They don't want to engage in the United States. They want to run and hide in other jurisdictions. And I think part of why this is so shocking is this was a player that not only was regulated in some regards, some of their entities, but also was engaging in Washington and with regulators. And so I think that that just led to a bigger and bigger surprise. One other thing that I want to call out also is there's an individual, Ian Allison at CoinDesk, who actually broke part of this story with one of the balance sheets. And I think that it's important that this wasn't the mainstream media. This wasn't some of the critics. This was actually somebody within the crypto ecosystem who works at a crypto media company who did this. And so I think that's another interesting point as well.
What was your relationship, if any, with FTX? Did you have money with them?
We had a business that had some money with them. We have a number of funds and different entities that were either investors, LPs, that had money on the platforms. I've got a business where they had an advertising relationship with FTX US. And so, you know, this was a major player, the second largest crypto exchange in the world. And to see this happen, I think, again, is just pretty shocking.
Yeah, what's the status of whatever, money you had with them, the advertising relationship you had? Do you have any idea or what the status of it is now?
I think that most people are all sitting there saying, what's going on? Right. And that's unfortunate because there's so many great things that are happening in this industry. And we can touch on some of those advancements. But I think right now, everyone is kind of operating with the same amount of information, which is what they're reading on Twitter. That's unfortunate. There's a lot of people who are upset, who are mad, who frankly don't know what to do. And hopefully that gets cleared up quickly and we can get some more information. But right now, I think there's just a lot of people who are saying, I don't have any information. I don't know what's going on.
I mean, you're pretty well connected in the crypto world. Have you spoken with Sam Bankman-Fried?
I've not spoken with Sam. I don't think many people have spoken with Sam. I think that Sam, is obviously dealing with a lot of stuff right now. And frankly, the conversations in private of many people in this industry are saying, I think, three things. One, this is shocking. Two, they are very surprised at how well some of the assets are holding up, given the second largest crypto exchange in the world just imploded and had to file for bankruptcy. And then the third thing is there's a lot of people wondering what's next, right? Does this chill institutional interest? How will this actually affect retail interest? What is going to happen to some of the technologies that people were very excited about? What will the results be for other infrastructure players, both the regulated and unregulated players? There's a lot of open questions that I think are important to talk through. But ultimately, I think that the industry is coming together and saying to themselves, like, hey, this is a big moment. It's a negative moment, but ultimately they still have deep conviction that Bitcoin is going to end up continuing to thrive in the future.
You tweeted last night, I'm going to quote from it. I know many of you are mad, upset, hurt, and confused. I am sorry. Unfortunately, I don't have more information on what to do. I have Bitcoin locked on platforms as well. This sucks. There's no hiding that. You say I am sorry. What are you sorry for?
Yeah, I think that every single person in this industry right now is sorry that anyone is suffering, right? Part of the beauty of Bitcoin specifically is that Bitcoin is going to usher in a better future. That's the promise of the technology. It is going to restore the ability to maintain your purchasing power over long periods of times. It is going to bring economic empowerment to billions of people around the world. Now, of course, as we have seen many times in this industry, there are ups and downs. There are things that people try, right? In many cases in the past, the implosions or the failures that we've seen have just been people experimenting where it didn't work. This seems to be something else. I think we'll get more information on that over time. I don't know if we can call that yet, but obviously that would be an important detail. And so sorry is just in general, when you see people suffering, you don't want to see that. These are many people that I know very well, people who have worked hard, who have tried to build that future that they want to see. And, already I think people were having a lot of of pain or experiencing a lot of pain. If you look across the last year, Bitcoin's down 75%. Now, there's a lot of stocks that are down significantly as well. Facebook's down 65%, NVIDIA, Amazon, they're down 45%, right? So just the Federal Reserve has said they are going to destroy demand. They've done an excellent job of destroying investment demand. And it looks like they're starting to get inflation under control to some degree as well. But to have an entire year where it's basically been down only for asset prices across markets, to then have this kind of big moment, it just hurts, right? People want to go back to having the good times. They want to see that future ushered in. And ultimately, I think that we need to have these moments because it does create resilience. But it still sucks when you go through it.
But I mean, and I'm wondering what you make of the fact that some are pointing fingers at people like you and other so-called evangelists who have been, as I said at the outset, on this network from the beginning, on your own podcast and in other media forums, pushing Bitcoin relentlessly as a store of value, as the kind of asset that seems to be far from maybe what it actually was, at least at this particular time. How would you respond to that sort of criticism?
Well, you guys have had Warren Buffett and Charlie Munger and paraded him around the network as these great investors, which they absolutely are. They're some of the best investors that have lived during our lifetime. But if you go back to the beginning of the pandemic, when Bitcoiners were calling out saying the undisciplined monetary and fiscal policy was going to debase the dollar, inflation would not be transitory, and Bitcoin would be an asset that you would want to fly to look for safety. If you go and you look, Bitcoin has outperformed Berkshire Hathaway. It's outperformed most assets, right? It's up almost 100% during this period of absolute insane, undisciplined monetary and fiscal policy. And so, yes, it is down 75% over the last year, but Bitcoiners also continue to just hammer the same point over and over and over again. Dollar cost average, long-term hold into a finite asset where demand will increase because of the debasement of currencies. And what we have seen is that continues to play out. And so what I always tell people is don't listen to what I'm saying. Just simply watch what I'm doing. And I've been buying multiple times this year as the price has been falling. I continue to dollar cost average. I continue to have very high conviction in this asset. And just as I used to come on this show in 2018 and say, I believe that Bitcoin over a long period of time will outperform a lot of other assets, I still believe that today. And I'm putting my money where my mouth is. And time will tell if I'm right.
I know you are. You are. But isn't it dangerous to suggest that others put money where your mouth is? Given what's happened to go from 60,000+ to where we are today. And you mentioned Munger and Buffett, by the way. Munger, who has called crypto rat poison in the past, said just this morning that crypto is, quote, rife with fraud and delusion of crypto itself. He said, quote, the country did not need a currency that was good for kidnappers. Carl Icahn the other day told me it's lawless like the Wild West. Those guys were pilloried, especially Munger and Buffett, by people like you when they made those initial statements. Doesn't this bear out that they're right?
No, I think there's two things here. First is, if we're going to talk about just pure performance, Shopify and DoorDash are down 75 to 90%, right? They're stocks, literally just tech stocks that are openly talked about on financial networks that are down more than Bitcoin. So if Bitcoin is so great, are we now going to argue that Shopify is not valuable, that it's over? No, of course not. So I think that that's just an argument that doesn't really have any legs. In terms of Charlie Munger, as I've said over and over and over again, they do not understand the technology. To confuse Bitcoin and crypto, one, is a false comparison. The second thing is that the US dollar is used more for money laundering or criminal activity than Bitcoin. The former CIA director came out with a study to show that, right? And so as you go through the arguments, I get it, right? People want to have the headline grabbing kind of anti-Bitcoin statements. They want to have the critiques. But as you continue to look at the technology, this is a decentralized peer-to-peer network that has a great track record of protecting purchasing power over long periods of time. And Bitcoiners are trying to usher back in timeless investing principles. Warren Buffett and Charlie Munger, buy great assets, hold them forever. That is a Bitcoin principle. Dollar cost average into great assets. That is a Bitcoin principle. And so I believe that if Warren Buffett and Charlie Munger were 25 to 35 years old today, they'd be Bitcoiners. The difference, though, is they didn't have the opportunity to allow for decentralized software-based money to come along to store their assets. Bitcoin has outperformed their investments over the last decade, and it has continued to during this period of undisciplined monetary and fiscal policy. And I believe that they will continue to hate on Bitcoin. They will continue to say things that show they don't understand it.
The problem is if you want to do, and you make the analogy to various stocks, you can do a fundamental analysis on a company's projected earning power over a set period of years, decide what the correct valuation is to pay for that future growth. You can't do any of that in crypto. You can't do any of that with Bitcoin. You can be a believer in blockchain technology and still think that crypto is a highly speculative asset based on next to nothing.
Well, again, I don't believe that to be true, right? So I would say two things. One is you can definitely do a fundamental analysis. Take hash rate as an example. Bitcoin is the most secure computing network in the world. Hash rate's at an all-time high. Price is down 75% and hash rate keeps climbing. There's a dislocation between price and fundamentals. 67% of the Bitcoin that is in circulation right now today has not moved in 12 months. The price of Bitcoin fell 75% and 67% of the Bitcoin didn't move. We are watching the greatest battle of 2022, where it is Bitcoiners and the hodlers versus the macro environment. And I'm willing to bet, and I am betting, that the Bitcoiners will outlast the macro tightening financial conditions. And ultimately, the Federal Reserve and other central banks around the world will have to return to loose monetary and fiscal policy. And what we will see is that the hodlers will still be hodling. They will still be Bitcoining. And ultimately, the people who do not understand the technology will continue to hate on it. But Bitcoin doesn't care. It produces block after block after block of transactions. And it is the only monetary policy in the world over the last 3 years that did not change.
There's a report. I reference, forgive me for interrupting you, but there's a report, and I referenced this at the top of the segment here, about another crypto-related entity that may be in trouble. Wall Street Journal reporting that BlockFi is preparing for a potential bankruptcy. I watched a clip before we did this interview in which you called it a, quote, rocket ship. Get on board, you said. I am bullish, bullish, bullish. I mean, isn't that part of the problem? Don't you have any regrets whatsoever for making statements like that and perhaps putting people who are less experienced than you into some of these assets?
Yeah, I mean, Scott, you can take anything out of context. I've literally recorded 1,200 podcast episodes, right? You can go back and find all kinds of crazy stuff. But the context you're talking about was I was an investor in the company in a private placement round where accredited investors evaluated a business and put capital in. If something happens to a company that I'm an investor in, then we lose money. That is called capitalism. It's called taking risk. And the fact that we now want to take that and somehow spin it or pull it out of context, I think is inappropriate. Instead, what I think we should be talking about is the fact that we have businesses in the United States who now are suffering at the hands of what appears to be a potential fraud. Again, we will get those details. But now, as those businesses are suffering, we have funds, we have different centralized infrastructure companies. This all happened in the United States, which supposedly we were yelling and screaming about people who are running around trying to avoid regulation. We need to get our act together in the United States because this technology is not going away. This is going to be one of the...
This is not about pointing fingers. This is not about that. I think it's mostly about understanding the power that you have with as many Twitter followers as you have, with the captivating voice and articulate way that you describe this asset in an environment that grew to be highly speculative. You don't think that you have the power to influence people to get into certain areas of the market that maybe they shouldn't be in? You don't think that's a fair question to ask?
You can ask whatever questions you want. Scott, CNBC is the most powerful financial network in the world, and people critique CNBC for pumping Bitcoin. I don't see anyone on CNBC apologizing for that. You talk about an asset. Just because somebody criticizes you for something doesn't mean they're right. And so if you're going to argue that CNBC is not as powerful as me with a single Twitter account, that's insane. And so ultimately, there's no difference between any of the media platforms, right? I have a media platform. It happens to be under my name. You have a media platform. There's plenty of people. You've been talking about Bitcoin all day. At the end of the day, people will critique the assets. But the Bitcoiner mantra dollar cost average, hold a great asset forever. Those are timeless investing principles that Warren Buffett, Charlie Munger, and many other investors go ahead and look at. And just because the price goes down, again, there are other companies and stocks and assets that go up and down in price. This is how markets work. And so, no, I don't think that CNBC should be criticized for talking about an asset. You have people who come on who like it. You have people who come on that don't like it. I have people who talk about it positively. I have people who talk about it negatively. That is where the conversation lies. And rather than simply going around and trying to yell and scream at each other in the bad times, what I think we should do is we should encourage more conversation. We should have conversations like this where people who like the asset, who don't like the asset, come together, they discuss it, and then ultimately the free market will decide what happens. I have a view. I'm expressing that in the market, and we'll see what happens.
Okay. It is undeniable that confidence in this asset class has taken a tremendous hit.
I don't agree with that.
You don't think confidence has taken a hit? Really?
67% of Bitcoin. Don't listen to anything anyone says. 67% of Bitcoin in circulation has not moved. It's an all-time high. It's never been higher. Bitcoiners are holding. They are not selling this asset. That's what the mainstream media does not understand. Bitcoiners do not care about the price. And you can see it in the data. It's all on chain. Anyone in the world can evaluate it. 67%
they probably bought it higher and they're not selling it. So they're holding on, in your words, for dear life because they're believers still. They don't want to believe that their investment is not coming back. I mean,
that's not true either because wallet addresses on chain with 0.1 and 0.01 Bitcoin. This is literally hundreds to a couple $1,000s. The number of wallet addresses on chain continues to hit all-time highs. The people, not institutions, not nation states, the people continue to buy Bitcoin. It is available for anyone in the world to audit on-chain data. That is the beauty of Bitcoin. This is not up for opinion. It's not up for debate. There is hard data that you can go on. You can look at yourself. 67% of Bitcoin is not being sold, and the number of wallets on chain that continue to dollar cost average into this asset is going up. It's hitting all-time highs.
You don't think that institutions are going to more closely scrutinize the investments that they make in this space after the FTX blow up? You really don't believe that? You don't think the average investor is going to sit at home and think maybe crypto isn't what I thought it was? I'm afraid of losing all my money despite what Anthony Pompliano suggests I might want to do?
Well, Scott, see, you're conflating two things. You're conflating the centralized equity investments with Bitcoin, which is a decentralized currency.
No, I'm talking about the confidence in the space itself. I'm talking about the confidence which has clearly taken a hit. How couldn't it? When an individual like Sam Bankman-Fried has his fortune literally blow up overnight, when one of the largest crypto exchanges in the world blows up overnight and fortunes are lost, small fortunes by people who can't afford to lose it are lost, you don't think that there's going to be more scrutiny on the kinds of investments that are made both by individuals and institutions in the future? And you don't think it's relevant to discuss what restores that confidence in what is still a fledgling asset class with next to no regulations whatsoever?
Well, I never said that there wasn't going to be more scrutiny. I absolutely believe that. I've tweeted that publicly. The second thing is it is regulated. You have to stop saying that. This industry is regulated in the United States. If you run a centralized exchange, you have to go get approvals from regulators. The regulators are doing the best job that they possibly can to continue to have oversight here. Saying it's unregulated in the United States is just false. That is inaccurate information. There are places in the world where it is not as regulated as in the United States. The actors in the United States of America want to do three things. They want to build great companies that solve problems for customers. They want to be regulated in a way where they feel like they can operate their business and also adhere to whatever rules the regulators believe are accurate. And the third thing that they want to do is that they want to create economic opportunities. That is what capitalism is about. That is what this country was built on. It is what the American dream is all about. And if there is
obviously not regulated enough. Even the biggest players in the business suggest that it needs more regulation.
Bernie Madoff was regulated. Of course, if bad people are going to do bad things, duh, of course. But the regulations only work if people are telling the truth. If the auditors go in and they audit, and in this case, there's accusations that somebody created a backdoor to change the numbers so the auditors couldn't tell. Ultimately, bad people do bad things, but that doesn't mean it's not regulated. Right? That's not what that means. And the big players aren't saying bring on more regulation. What they're saying instead is, hey, we understand where the rules are. We need to get this right. In the United States of America, we cannot create rules that push people outside the US. We have to do this here in the US. The US has the best capital market system in the world, and it is the shining light on the hill. If we want to continue to do that, especially in this industry, we have to have rules that make sense. We have to do it so that people can actually operate their businesses within it. And what you will find is there is great appetite in the operators and entrepreneurs to work with regulators to create that environment. And I think actually regulators and the entrepreneurs want that together. They're working as hard as they can on it. But to say that there is not regulation in the United States is just flat out false.
We're going to leave it there. Anthony, I appreciate your time.